'Twas the night before Christmas. No, wait, that's not right at all. It's not even Thanksgiving. Hold on. This is the tale I want to tell. 'Twas the trading session before Nvidia Day, and the futures were green. Market leadership was in question, filling the bears with glee. Jensen put on his leather jacket with care in preparation of a quarter that would be heard through. And that's about as much as I got. Maybe I'll complete the poem by Christmas. Happy Nvidia Day, everyone. It is me, the Gorilla with Glasses, Don, here to provide you a little context ahead of the most important quarter of earnings season at an integral time for markets. I'm going to start by telling you what Wall Street is and isn't actually trying to figure out through the report, and then provide a chart to help you gauge the market's response. Does that sound good to everybody? I see some nods. Good? Good. Okay, let's go. Let's start with what Wall Street isn't looking for. Revenue, earnings, and guidance. Yeah, doesn't really matter because the street already knows they're going to be AAA. Based on what we heard from Meta, Microsoft, Google, Amazon, Oracle, and Tesla during their reports that were delivered less than a month ago, we know top line, bottom line, and guidance from Nvidia are going to be so amazing that they're going to make some countries look lesser. And of course, if the numbers aren't blockbuster, then yeah, the numbers won't matter. But the point I'm trying to make is, at this point, Nvidia's actual numbers are much like stock valuations, broadly speaking. They don't matter until they do, which tends to only happen when things go wrong. So what is the only question that matters? To get that answer, you need to know the current bear case. In case you missed it, Michael Burry of Big Short fame has recently called into question the depreciation schedule data center companies like CoreWeave, ticker symbol CRWV, and Nebius, ticker symbol NBIS, are applying to their Nvidia GPUs. A little accounting on depreciation. You depreciate an asset over the asset's useful life. Now, the data centers are arguing that 5 years makes sense because that is what they anticipate to be the useful life of these GPUs they're purchasing before they're going to have to be replaced. Burry disagrees, asserting that the period should be shorter because of the rapid upgrade cycle being priced into analysts' expectations for Nvidia's future earnings. So if Burry is right, then the data center companies will be stuck in this ramp-up CapEx phase for a much longer time than currently anticipated, delaying the timeline to the massive profitability these data centers have promised once they finish that CapEx ramp-up cycle and enter into the lower cost phase of the business model that is operating a data center whose only major cost is energy. It doesn't actually require a lot of labor to run, so the labor cost isn't there. It's just the energy needed to fuel these things. So why would anyone think this is an issue? And I don't always come to Burry's defense. Very smart person, but obviously has had some missteps being short in one of the more amazing bull markets of recent history. In his defense, Jensen has in the past quipped those who have suggested running AI on prior iterations of NVIDIA GPUs. He just basically has come out and said that's not a good strategy. And as of now, Jensen appears to have won this argument. In doing so, he shortened the upgrade cycle for GPUs, which has increased the future earnings of NVIDIA in the 1, 3, and 5-year timeframes. So congratulations. But how do you reconcile that short upgrade cycle with the data centers asserting a useful life of 5+ years? If the data centers are right, it implies a much longer upgrade cycle. Lisa Su, AMD CEO, made the case on CNBC's Air that older GPU chips can and will be used for years to come, albeit for less advanced tasks. So this is the question that matters. Which is it? Do these GPUs need to be upgraded every year, meaning the data center stocks are toast? Or can you wait to upgrade your GPU, implying that short-run numbers for NVIDIA are a little too high? Is there a middle ground? That's my take. I think so. I see a world where the GPUs have a useful life in the ballpark of 5 years. But for the hyperscalers, which are competing for dominance, their only choice is to ensure access to the latest and the greatest. But it will be up to Jensen to walk this very fine line at a time when the AI cohort is in flux. So now that you understand the question we're all trying to answer, Let's talk about how we should gauge the response in the price action. Quick shout out to Alvaro, my friend at the Bilingual Stock Market channel, and also the co-host of Charts in Check, for sharing with me the expected move for Nvidia's earnings. Told me this morning it's around $15. As of about 8:30 when I'm recording this, the stock is on track to open around $1.85, 185. So this $15 swing equates to an 8% move. For my silverbacks out there living in percentage terms, I think that's the best way to do it. So I'm gonna throw up a chart real quick so you can see what the expected move looks like on the chart. And here's how I am using this information. I'm gonna try to keep this segment brief because talking through all of the potential permutations is exhausting as it is useless. And it is exhausting. So yes, it is in fact useless. If Nvidia gives us a move within the $15 or 8% expected move, then in my opinion, it is most likely that we got a quarter we all thought we were going to get, and Jensen did, an okay job treading the needle on the depreciation debate. In that case, I would anticipate the quarter acting as a clearing event for the market, and S&P 7,000 in the next month and change before 2026 before 2026, excuse me, is still in play. If the stock moves beyond what is expected, then it means one of two things probably. First, it could be a short-term overreaction. Again, let's go back to the base case that I laid out. We get a good quarter and we leave feeling better about the depreciation issue. We wake up Thursday and the stock is up down more than 8%. It's above 200 or below 170. I'd shrug it off and just assert the market is overreacting. However, if we wake up on Thursday and we're above 200 and below 170 meaningfully, it could mean that Jensen delivered something thesis changing to the upside or the downside. This is an extremely hard quarter to handicap because I don't know what Jensen could say that would be so incredibly positive that a 4.8 at $1.5 trillion company has an 8% move in a day. On the other hand, knowing what we know from the hyperscalers, I struggle to see what could be said. And he's just so good at threading the needle. He's done it times in the past. I don't see what he could say that would make us feel a move beyond that 8% is justified. And that is where we get into the point where you start talking about all the permutations, all the speculation. And so that is where we're going to end the conversation on interpreting price action. Thankfully, we'll all get to find out together in real time over the next 24 to 36 hours. If you're an active market participant, you have till about 4 p.m. to make whatever adjustments you need. I hope that this helped you prepare for arguably the most important earnings report left in 2025. I appreciate you stopping in and celebrating NVIDIA Day with me. Take care. Good luck.